morning, and thank you for joining us today. I'm Olivia Rios, Director of Operations at the LA Latino Chamber, and I can't wait to hear today's programming on how a business can acquire a commercial real estate property or get existing business with 100% financing. We'd like to thank those businesses who have reached out to us the last few days expressing interest in our program. And I know that our speakers have been receiving calls as well with inquiries, and so we know that's a good sign that we're on target with our programs. Our speakers today are Reyes Mejia, CEO, broker, and loan officer at SoCal Loans, and William Cabrera is vice president. Both will be providing you with a plethora of information on funding. They will share their expertise and knowledge to help you navigate on SBA loans and how you can acquire commercial building with 100% financing. I think I'm gonna call you guys for a property pretty soon. So combined, they have over 30 years of experience in the lending, real estate, and banking arena, and we are fortunate to have them with us today. As far as our programming, we will continue to bring you relevant training and resources to help your business grow and thrive. Before we start, we ask that you mute yourself, ask questions in the chat box, and those will be answered at the end of the session. Once again, the session is being recorded and will be available on our website by early next week. And with that, I'd like to introduce Reyes and Wilbert, who will introduce themselves in greater detail. Gentlemen, welcome.
My name is Reyes Mejia. I'm the CEO of SoCal Loans. I've been in the business for over 20 years. Me and my partner, Wilbur, put this together for you guys today. So I hope it's informative and we're able to assist you guys with any of your real estate or loans needs. Wilbur?
Good morning, everyone, and thank you all so much for joining. My name is Wilbur Cabrera. I'm the vice president for SoCal Loans. Been in the industry for over 14 years in the banking, commercial, and business lending industry. SoCal Loans, we're a brokerage firm here located in Los Angeles, where we specialize in helping small business owners with any type of business financing, commercial real estate, and residential real estate. We're extremely excited in this gloomy day. Normally, we always have sunny LA, but it's gloomy and it's Friday. Hope you guys are excited. We're extremely excited to show you guys what we have in store for you, because the SBA has great programs to help small business owners acquire commercial real estate and a business at 100% financing. So with that being said, I'll give you guys a little bit of a background on what the 7A loan program is. There's multiple programs that the SBA has, but today we'll be focusing on the SBA 7A program. And as you can see, the SBA 7A program can help client with a couple of different items that they might need for their business. So for example, a business can acquire commercial real estate, can acquire a business, but this program can also be used for additional things as short and long-term capital, refinance current business debt, purchase equipment. With technology nowadays, that's kind of seen as a piece of equipment. So we sometimes get requests of clients trying to upgrade their AI systems, and that's something that an SBA loan can also do. It could also be used for tenant improvement loans, like purchasing furniture, fixtures, supplies, changes of ownership, and it also has multiple other purposes as well. The 7A loan does cap out at $5 million. It doesn't mean that you can't get additional financing through the lenders that you're going to, but what that means is that this specific program caps out at $5 million. But with that being said, the SBA 7A has many different purposes, but for the purpose of today, we're focusing on the main two things, which is 100% financing for commercial real estate and 100% financing for acquiring an additional business. So qualifications, right? Some of the questions that we get is, how does somebody qualify for 100% financing, or how does somebody qualify for an SBA loan? One of the main things that we always talk to clients about when they're trying to purchase specifically commercial real estate, 51% of the property needs to be occupied by your small business. So that's something to always make sure to keep in mind when you're a business owner and you're planning on purchasing an additional business and an additional or your first time purchasing commercial real estate. Make sure that you're going to occupy 51% of the property. What does this mean, right? What this means is a lot of small business owners want to also rent part of the real estate that they're going to be purchasing. That's great. So in shorter terms, if the property is 10,000 square feet, you're occupying 5,001, for example, right? That's what that means. And then the rest, you're able to lease it or rent it, however you want to do it, or you can occupy 100%. The down payment, you can qualify with some lenders, you can qualify for 0%, right? Which is 100% financing for the down payment. At worst case scenario, which is still not bad, you can either put 10 or 15% down. 15% is the max. Sometimes the lender or us, we would recommend clients also sometimes to put 15% if they don't want to put additional collateral. What does additional collateral mean? What that means is, for example, if you have a property that you own personally, but you're putting less than 15% down, a lender will ask you to also put that as collateral for purchasing if you don't qualify for 100% financing. The terms for an SBA loan for acquiring a commercial real estate is 25 years. If you're acquiring a business, the term changes. The term is up to 5 years, up to 10 years, my apologies. So it's a 10-year loan for acquiring a business, but if you're acquiring real estate, it's up to 25 years. The rates are normally, it's for some of the lenders that are doing 100% financing currently, the rates are usually prime plus 2 to 3%. Prime is 8.5 as of today, but this does not mean that this is set in stone, right? Because each lender has different qualifications and different guidelines that they have. So maybe you could find a lender that will approve you for 100% financing at an even lower rate than what prime is today, which prime is 8.5. What we're seeing in the market is most of the lenders that are offering 100% financing are offering at prime plus 2 to 3%. That's usually the average from what we're seeing currently in the market, just because not every lender is offering the 100% financing. Two major things that to qualify for an SBA loan, not just for 100% financing, but you do either have to be a US citizen or a US resident alien, which quote unquote a green card, right? Some lenders, the FICO score can be as low as 600. We get one of the major questions that we always get when it comes to around credit is, hey Wilbur, I went to a lender and my credit was 640 or 650, but why couldn't this lender do it, right? And why is this other lender that offers the FICO score as low as 600, why can they do it, right? One of the things to always keep in mind is every lender has different guidelines, right? The SBA has their own guidelines that the lenders have to follow, but it's an additional step for the lender as well that they have their own guidelines. So they don't have to necessarily follow 100% the guidelines of what the SBA is. They have their own guidelines as well, that if you meet their guidelines, you will meet the SBA guidelines as well. So those are things to always kind of keep in mind. Businesses normally to qualify for 100%, they want it to be 1 to 2 years normally. That's what they kind of want to. Some of the lenders, what they want to be cash flow normally. What does 1 to 1 mean is, and in some cases it could be lower, right? But what this means is for every dollar in debt that you have, you're even, right? The ratio is 1 to 1. And what does this mean? In some cases it could be lower. What this means is, for example, if you're behind the ratio where you need to be, It could be lower using projections. And I will talk a little bit more about projections as well. Properties that could be harder to qualify for 100% financing, but it's not impossible. It's still doable. Some lenders just require additional items to qualify, but it's not impossible. And some of those businesses or properties are car washes, gas stations, hotels. Normally, for these type of properties, it's a 10 to 15. One of the cool things with the 100% financing, and I'll give you an example, is we currently have a client right now that we're working with where we're doing the 100% financing. The client also needs an additional $300,000 for working capital, which that working capital is going to be used for tenant improvements and to purchase equipment. So not only is this client qualifying for 100% financing to purchase a property, but they're also getting that additional capital that they need to make sure that before they open the doors, right, they have the proper equipment and the office or the building looks nice and ready to open the door. So we're going to be able to help that client with that additional capital as well. That's always one of the cool things that I love about this program with 100% financing, because there are lenders that are able to give you that additional capital that you may need as well. Timeline. This is a question that we get asked quite a bit. Normally, for an SBA 7A loan, the timeline is usually 45 to 90 days. This doesn't mean that it's going to take up to 90 days, or it doesn't mean 45 days. I'll give you an example. We just did a property in Texas that I'll speak about. That property, we closed it right under 30 days. And it was an SBA 7A loan for a purchase of commercial real estate. But normally, it usually takes 45 to 90 days. And these are some of the things, like when you look at the preliminary qualifications, right? These are things that the lender or the banker should be asking right from the beginning. They should understand your credit score. They should understand the years in business, what your income is, what liquidity, which means cash, do you have available? Why do lenders want to know how much cash you have available? Question we get asked quite a bit. Very important question, because what happens if this lender gives you the loan today and 2 months down the road, something happens with the business, you get stuck, but you don't have any cash available to either run your business or pay your bills? That's why cash is very, very important. Lenders want to see reserves. Normally, they want to see reserves maybe for 3 to 6 months. And it all depends really on the transaction that you're trying to do. Some lenders might ask for more. And it also depends on the lender, which lender you're going to. Some lenders want to see that you have maybe a year. And some lenders would just want to see that you just have maybe 1 or 3 months available to make the payments back, right? The intake verification, this is kind of where the lender does a little bit more in details, where they ask for a little bit more from you as the customer. They might pull your credit. They ask you for the 3 years of tax returns, a resume. We have documents already that are pre-made where we can present that to you and you just fill it out, or you can present a bio. Interim financials. This is something that we run into quite often, where the client doesn't know what an interim financial is. And as you probably shouldn't know, right? You're not the CPA, you're not the bookkeeper. That's something that's a question more for them, as you're extremely busy running your business. So an interim financial, pretty much what that is a profit and loss statement and a balance sheet. And in some cases, they will ask you for your account receivables or accounts payables. This is something that normally, if you use a software, for example, like QuickBooks, that system's able to do that for you. Sometimes clients don't use that type of system, so they'll have a bookkeeper or a CPA that will be able to put that together. This is kind of, for the most part, where clients take a little bit longer to provide these documents, because something that's out of your hands. You have to ask your bookkeeper and your CPA to prepare these documents for you. But as you're thinking of what you're planning on doing for your business, maybe the next 3 to 6 months or within the next year, These are things that the lenders will need. They're going to need what's called a personal financial statement. This is your personal information, your business debt. How will the funds be spent? Especially when you're talking about if you're going to be acquiring a business or commercial real estate, and you're going to need additional funds, maybe for working capital, maybe for tenant improvements, or to purchase equipment. It's extremely important that the lender, banker, broker, whoever you're working with, understands exactly how you're going to use the funds. So for example, if you're going to be asking for an additional $300,000, me as the broker, I will ask you, I need you to explain to me how you're going to be using every single penny. Because guess who's going to ask me that? The lender's going to ask me that, and they need to present that to the SBA, right? The SBA needs to understand how you're going to be using those funds. It's extremely important. After the intake part, the lenders will give you what's called a letter of interest. The major lenders, when we're talking about like the Bank of Americas, the Chases, the Wells Fargos of the world, some of them won't ask you for a good faith deposit, depending on the transaction, on what it is. But normally fits with the real estate transaction, they will. But if you're talking with a lot of the lenders that only specialize in SBA lending, there's lenders that are called non-deposit lenders. What does this mean? A non-deposit institution is a lender that only specializes in lending. They don't open accounts, they don't do credit cards, they don't do any of that. Their sole purpose is to provide SBA lending to small business owners. So normally those lenders that are just SBA lenders and non-deposit lenders, their guidelines are very aligned to what the SBA guidelines are. What does this mean? What this means is you don't have to go through that additional review with some of these bigger lenders, because those bigger lenders have their own guidelines that you also have to meet before you even meet the SBA guidelines, which is why sometimes you will see that, okay, I was declined at one of these major lenders, but I was approved at this smaller bank. It's because the guidelines and the way that they underwrite things are very different from some of these other lenders. It doesn't mean that this other lender that declined you, it's a bad lender. It's not. It's just they have their own specific guidelines that they need to follow, and that's it. We just got to look for a different option. So when you're working with somebody that specializes in this, for example, like a business broker or somebody like us, we review this already. So once we get your file, I will do pretty much what a lender will do. We'll do a preliminary qualification. We'll kind of do an intake. And then once I have these things here, I already know which lender I can take your file to, because I know I can't take it to this specific lender because the way that they underwrite it or what they look at, I know that you're not going to qualify. That doesn't mean that I can't take either. If you tell me, Wilbur, I want you to take me to so-and-so bank, more than happy to do so. But I will give you what my experience is and what my thoughts are on why I think that this lender might not approve you. But I will definitely do whatever the client tells us to do. That's what, at the end of the day, as a broker, that's what we need to do. We'll follow whatever your decision is. But we will also guide you on where we think that it's going to be the best chances of you getting qualified for. A lot of the lenders that we work with, once they provide a letter of interest, is because they've done a pretty good deep dive into your financials, your credit. It's not fully underwritten yet. It just, a letter of interest just means, hey, I'm interested in looking at your file and doing this loan. It's not a full approval yet. But these are some of the things that once they give you a letter of interest, they'll tell you the good faith deposit, right? They're gonna tell you kind of what the appraisal fee is. Sometimes they'll give you a range of what the appraisal fee is. So for example, there's some lenders that will say, hey, your appraisal can be anywhere between $2,500 to $4,500. The rate, the terms, if there's prepayment penalty, if there isn't, after you agreed with the letter of interest, you sign it, you return it to the lender, they move into full underwriting. This is where you will get what's called an approval or a loan commitment with conditions. What does conditions mean? This means that, for example, if you're purchasing commercial real estate, there's an appraisal that needs to be done. So the property normally needs to appraise at the amount that they're selling the property for. If it appraises for less, what does that mean for you? It means that you'll have to come out of pocket for the difference for the most part. It also could mean that the lender might say, look, this property appraised too much under, we're not going to be able to provide this loan for you because we don't think you're doing the right decision. And it also works the same way for a business. For a business, it's not an appraisal, it's more of a business evaluation that they do. But it's very similar to an appraisal. They're just pretty much evaluating what the business is worth. So it works the same way on that. Sometimes what we've seen is real estate transactions move very, very quick. When you're acquiring a business, this is where we've seen things take a little bit longer. One of the main reasons for that is because not only do we need to see the financials for you as the borrower, we also need to see the financials and tax returns of the business that you're going to acquire. And this is something for you guys to keep in mind. If you're going to be acquiring a business through the SBA 7A program or an SBA program, if the seller that's selling you the business does not want to provide financials or taxes, you have no loan. It will be impossible for an SBA lender to give you a loan without seeing the financials. And that should also be a red flag to you as the buyer. Why doesn't somebody that's selling you a business want to show you the financials and the taxes of the business that you're intending to purchase? That should be a red flag to you as well. But even though you might qualify for the loan perfectly, your credit is perfect, your current business is doing phenomenal. But if this seller does not want to show those items, it will be impossible for you to get the lending for what you're trying to acquire. This slide here, it's as well, like I mentioned, some of our people in our industry reached out to us. So for you that are brokers and bankers, these are kind of things for you guys to kind of look at. If you look at the bottom, let's say if somebody wants to purchase a business, who is the person that's going to acquire a business? Because it could be somebody, for example, that is a CPA working at a CPA firm, and the business owner is going to retire, but he's been working there at that specific CPA firm for 3-5 years. Now he's an employee of that firm. He knows how it works. He's a CPA himself. Now that person has a very strong management experience, right? Because he's been working at that specific firm, and maybe he's the manager of the firm as well. So these are things to kind of look for, but it could be for a startup, right? For a business acquisition, it can be for a startup. It could be an existing business owner. Seller financing. This goes for both type of transactions. Seller financing means that the seller, for example, if they're asking for you to put something down, for example, they're asking you to put 15% down, and the seller says, you know what, I will lend to you the 15%. So a lot of lenders will be perfectly fine with that, with an SBA loan. So you technically end up putting zero down out of your pocket as well, because 15%, the seller is going to carry that note for that 15%, and then the rest, the 85%, is going to be given to you as a loan from the lender. So those are kind of things to keep in mind. So these are just opportunities to kind of identify for those that are in our industry, to kind of see when they're out there talking to small business owners, things to kind of pay attention for, because this also helps you enhance your skills when you're talking to small business owners and how you can help them, right? At the end of the day, we're all here in this industry really to help small business owners grow. A lot of you guys come from a background, Latinos, right? Me myself, I'm Salvadorian, born and raised. Came here when I was younger. But it's great to see our Latino business owners continue to grow and have that knowledge and have the right expertise that are going to be able to help them continue to grow. Verticals, kind of certain industries and certain facilities that sometimes some of the major lenders might not be interested in, but there are many other lenders, like I was saying, the lenders that specialize in just SBA lending, which are called non-deposit lenders. These are some of the industries that they focus on, like a daycare, a laundromat, assisted living facilities, storage facilities. That's a phenomenal business to currently be in, especially if you're in LA, as you know. Convenience stores, franchise. We're seeing quite a bit of franchises either start or asking to continue to grow currently in the market that we're currently in. But this is just kind of something for you guys to see of what's kind of going on the market and what some of the other smaller lenders might be focusing on. We get a lot of clients asking us, Wilbur, we want to purchase a laundromat, or we want to purchase a convenience store or a liquor store. I went to my lender, but they couldn't do it. And it goes back to the same thing that I was talking to you guys earlier. Right? Some lenders specialize in certain industries. Some lenders' guidelines are very different from others. That's where you just got to find the right lender or the right guidance to take you to a lender that's going to be able to finance what you're trying to accomplish, right? What you're trying to purchase at the end of the day. These are some of our recent fundings that we have done through SBA and also conventional. That the loan on the right side, if you guys see the 1.8 million loan, that loan closed under 30 days, and it was really crunch time. The client had gone to a major lender. They were already 45 days in. They only had 20 days, about 20 to 25 days to close. We had to put the deal through full underwriting, full everything. It was a deal that was in Texas, but we were able to get that done for the client. So different situations are different. We get I put the helicopter on there because we do get a lot of clients ask us that they want to purchase something like this. So a helicopter, right? Why would a business need a helicopter? So that's kind of a question that I got asked, or why would a client need a boat, for example? One of the things that you have to remember is if there's a business need for your request, the answer is yes. Can it be financed for your business? It's going to be yes. So in this case, for example, this specific client travels quite a bit through California, either up north or down to San Diego. And as you know, lovely traffic in California, right, from Pacoima to Long Beach is going to probably take me 2.5 hours to sit in traffic to go there in the morning. So this client travels quite often. So this was a perfect method for her to get from point A to point B in California, where she needs to travel to be able to conduct her business face to face. And these are some of the other things that we focus on, and we can talk about that in another presentation. But I kind of wanted to show you guys some of the recent fundings that we're able to do. Most SBA lenders are nationwide lenders as well, most of them for the most part. But that's something to just keep in mind. There's always an option for your business. You just, for whatever the request is, the question that you need to ask yourself is, how is this request going to help my small business? And if you have an answer for that, how that's going to help, then the answer, can it be attainable through financing? The answer is going to be yes, because it's for your business and it's going to be able to help your business continue to grow. These are some of the testimonials of some of the transactions that we have done. North Hollywood, Burbank, Irving, Texas. We're a nationwide broker when it comes to small business lending and commercial real estate. Any questions?
Do you have loans for construction?
So the answer is yes. But like I said, what does that mean, right? What are you talking about when you talking about construction? Are you going to be building a Are you going to buy the land? Are you going to build a building for your business? What do you mean when do we have loans for construction? The answer is yes. But remember, I need to understand what exactly is it that you're trying to accomplish. But the short answer is yes, there are loans for construction.
Okay, we have another question here. What are the top 3 business types being purchased?
In LA County, I'm seeing quite a bit of daycare businesses being purchased. We're seeing laundromats being purchased, cleaners. We're seeing that quite a bit. And then you have your professional businesses. And for example, we're seeing a lot of like dentists being bought out. There's a lot of people retiring in that specific industry. Anything that has to do with the medical field, we're seeing quite a bit of that as well. Assisted living facilities, we're seeing quite a bit of that as well.
I have a question regarding the assisted living. So I'm a real estate broker, and I'm interested on this space of investing on assisted living and helping others do it. And with the 7A, if there is an existing assisted living business in a single family home, how are you going to apply the SBA loan? Can the SBA 7A be used?
I was hoping somebody would ask me that question. And thank you very much for asking that question. The answer is yes, it could be used. So remember, for example, I'll give you an example of a transaction that we're currently looking at. It's an assisted living facility at a home. We're looking into, if the client's able to do this, we're looking into purchasing the business and also purchasing the property. And it's a residential home, right? But
Yeah.
one of the things to remember is this industry, do they need a commercial real estate building, or do they need the type of property that they're currently in right now? And the answer is they need the type of property that they're currently in right now. They need a house. They need a single family residence home, or it could be a 4-unit. So the SBA will allow that to happen. Will allow to purchase the home because it's going to be able to use for business purpose. If that specific business that they're trying to purchase needs some type of specific licenses because of certain things that they might offer that are differently from other assisted living facilities, those are the things that the lender is going to be more interested in. Do you have the right licenses that you need to have? We understand that this type of business needs that type of property, so that will be able to be used for that purpose. Purchase the business and also purchase a single family residence home because it's going to be used for that specific business purpose.
Okay, next up we have, what are the names of some non-deposit lenders?
For the non-deposit lenders, like I mentioned in the presentation, they specialize in specific certain things. So a certain industry. So once you tell us your situation, then I can guide you through and I can tell you which lender I think you'll have the best possibility at getting a loan through. And our information's here on there, so you guys can reach out to us either via email or over a phone call, and we can discuss your scenario, and then I can give you the best guidance.
Okay, next up we have, does SBA program help a business owner that went through bankruptcy?
Yes, there are. They will ask you a little bit of more questions. One of the major things with that specific question, when a business has encountered a bankruptcy or maybe a foreclosure in the past, the lender has their own guidelines as well, right? So that's always one thing to keep in mind, because the SBA might say, yes, okay, we understand what happened, we can move forward from this. But if that specific guideline for the lender is a no-no, that you cannot have a bankruptcy, then at that specific lender, you might be declined. The one thing where you will be declined for sure, 100%, is if you had a bankruptcy and that bankruptcy included an SBA loan itself. You will not be lendable again through the SBA. That's the only time where, no matter what, if you bankruptcy included an SBA loan, you don't qualify anymore for any type of SBA financing, unfortunately. Doesn't mean that you can't get any lending anymore. It just means we have to explore different options for that. And we will have another presentation about alternative financing coming up in the next month or so, where we can discuss what we can do in those type of scenarios. Or you can reach out to me directly and we can have that chat.
Okay, next up we have, what are the top businesses to rent 49% of your commercial property to?
Very good question. Depends on the type of property you're trying to purchase. So for example, where our office is located is it's a small shopping center, right? We take the top. At the bottom, there's a laundromat, there's a barber shop, and there's another business down from us. So it really depends on what type of property you're purchasing, what the use is, right? So those are things to keep in mind, is what type of property you're going to buy. Like if you're going to buy, for example, a warehouse, you can't put a store in a warehouse, right? So you're going to have to put a business that's going to fit that type of industry. There's also zoning issues with the properties as well that we have to take a look into a little bit more in detail. So it really depends on the property that you're trying to purchase. If you're purchasing a shopping center, it's anything that's pretty much retail.
Okay, next up we have, I own a small apartment building. Can I use the 7A to purchase another apartment building?
No. The reason why is because that's long-term stay. What long-term stay means, it's more than 30 days that somebody's staying at your property. We get the question of, well, why does a hotel qualify, right? A hotel is short-term stay. But an apartment, fortunately, the answer is no, not for the SBA. But that doesn't mean that it's the end of the world for you, right? There's a lot of different other programs out there that can help you. So I would love to have that conversation with you, because we do get that question asked quite a bit, and it's always mind-blowing once we understand your situation and show you the different options that exist out there outside of SBA conventionally for your type of purchase that you're trying to do.
What is the size of your typical loan?
It really depends on the transaction. So if we're talking real estate in California, the typical size of the real estate that we're looking at, it's about $700,000 to $800,000. If it's a business purchase, business acquisition, about $500,000, kind of what the average is.
So next question here is, can someone who has an existing SBA loan in a commercial property get another loan for another commercial property?
What's the name of the person that asked that question?
So that's Dina Esquivel.
Dina, thank you so much for asking that question. The answer is yes. Remember, there's a cap at $5 million with an SBA 7A loan. So for example, if you owe $3 million, you still have $2 million available. Now we just need to understand what's the purpose of the need, right? It could be maybe that you are going to purchase another piece of real estate. It might mean that you need some working capital. It might mean that you need to buy equipment. But the answer is yes. If there's funds available for you, the answer is yes, because the cap is $5 million. So some people can have multiple SBA loans.
Okay, next up we have, do you know any business acquisition brokers that specialize in construction companies in the LA area?
Yes, reach out to me. I will give you some answers, and just tell me exactly, specifically in construction, what type of construction business you're trying to purchase, and I will guide you and send you some people that you can speak to, or we might be able to help you, because we get that quite a bit as well.
Okay, next up we have, how does a person just starting out a business, what do they need to know to get their business up and running and approved?
So that's that question has a lot into it, right? So we specialize normally in the lending aspect. Normally, what I would say is, do you know the industry that you're getting into, right? So that's a major key. What experience do you have in that specific industry, right? Have you done your research about that industry? Have you spoken to somebody that specializes in that specific industry? There's a lot of business consultants that do that as well. We specialize in the lending piece, and we'll guide you to a certain extent, but these are certain things that if you're planning on buying a business or starting up a business, what's your specialty, right? What do you love doing? What's something that you're really passionate about? But more importantly too is what research have you really done in the industry that you're trying to do? I'll give you an example. We just had somebody reach out to us about a specific business, and my first question was, what's your background, right? Do you understand the industry that you're trying to get into, right? That specific person wrote everything down that we told them, and they actually went and did their research. They came back to us with an actual business plan, right? Do you have a business plan, what you're trying to do? So these are things to always keep in mind, because the lender, if you're starting up a business, we will ask you for a business plan. Me as a broker, I will guide you to do a business plan. Do you have a resume? Do you have a bio? The lender needs to understand who you are, and how are you assuring to the lender that you're going to be able to keep this business up and running. And if you have zero experience, that might be troubling to the business, to the lender. You could cross collateralize industries. What I mean by that is somebody in the construction industry trying to purchase a laundromat. They might not have direct experience with managing a laundromat, for example, but they do have direct experience with managing a business. So that's helpful. You'll just have to create a business plan. You'll have to do projections. So that's one thing that I forgot to mention. So projections, a lender will ask you for either 24 months or 36 months of projections. What that means is you're writing everything down, exactly what the business is going to be doing, all of your expenses, for including payroll, gas, light, phone, whatever it is. You're going to include all of the expenses and what the net income is going to be. This is how a lender will see you and say, okay, this person actually has a great business plan, has great projections. They understand what they're looking at. So projections is just you're projecting how your business that you're acquiring is going to be doing for the next 12, 24, and 36 months. Those are things that are very, very important.
Great answer. Next up, we have, will the lender approve you based on your current income, or can they qualify you on the projected income?
Fantastic question. They will look at your income, but they will qualify you as well on your projections. That's why projections are extremely important. We do a lot of deals that are projection based when we help clients accomplish that. And we walk them through on things to look into when they're building their projections. So this is kind of important as well, to kind of know what your industry, how the industry is currently doing and what kind of like the medium is, right? Does this business, if they're grossing maybe $2 million, what's usually the net of this industry? Is it 10 to 15%? Is it 20%? For example, if it's 15%, but you're putting that in your projections, you're going to be doing 25 to 30. There's going to be what's called projections and assumptions. Assumptions is pretty much you're telling the lender how you came up with your projections. And this is very important. This is very, very crucial, because when you're doing your projections, the lender kind of knows already what the numbers kind of look like for your specific industry. But this is where it's going to take you over the top and make the lender feel a lot more comfortable. If you're able to speak about what the industry is currently doing and what you're going to be doing differently to make sure that you net more income at the end of the year. So yes, they will see your current income. They will also see your current debt. And if you're starting a business, it's going to be more based on projections. If you're acquiring a business, it's very crucial that, yes, you will need projections, because you're also going to show what you're going to be doing differently from the current business owner now, what you're going to be doing differently after, and how you're going to take this business to the next level. But before you even get there, that this business, when they do the business evaluation, is it evaluating at the price that it's being sold for? So if it's being sold for $500,000, but this business evaluates only for $300,000, we have a major problem, right? That's where you have to go back to the drawing board and negotiate with the seller to try to see if you guys can come to an understanding, right? Or why do they think that they're selling it for 500,000? Is there something that's missing? Sometimes, like for the person that asked about the construction, what does construction companies normally have? They usually have material and they usually have equipment. So what I would ask if a client is in that specific industry, not just would I, as a broker, not just would I guide you and ask for 3 years of tax returns and the current profit and loss and balance sheet, I will also ask you to ask the seller for an inventory report and also for an equipment report as well. What equipment do they currently have? Normally that will show on the balance sheet, but sometimes the lender wants to know more in detail. The equipment that you have, what year is it? How much was it? What's the current market value now? Those are very important things to understand when you're purchasing a business. Kind of the same thing with the laundromat. What is the equipment for a laundromat, right? The equipment is the dryer and the washers, right? So the lender will want to know a little bit more about that in detail as well.
Okay, next up, are these types of loans available only in California?
No, nationwide. So all of these loans are nationwide. We help clients from California to Texas to Florida to New York. We help clients throughout the United States get these loans.
Okay, next up we have 5 years seems too short amount of a time to repay a possible acquisition. Can you continue to refinance that amount?
That was my apologies when I said 5. I changed it after and said 10. An SBA acquisition loan is 10 years. Conventionally, if you're not doing an SBA loan, conventionally, meaning that you put 20 to 30% down, the loan is usually 5 years. But SBA, when you're going to acquire a business, it's 10 years.
Okay, next question. If it is an office building where your business is located, what are the top businesses to rent 49% of your commercial property to? If it is an office building where your office is located?
So that's a very good question. It really depends also where the building is located. What are the businesses that are around there? We've seen on office buildings, we've seen quite a bit, to be honest. We've seen where a construction company, that's where they have their headquarters. A marketing company, that's where they have their headquarters. We get a lot of even like a credit card processing company might hold their headquarters there. Call centers. It really depends where your property is and what type of businesses that are around in that area. But yeah, it really depends.
Okay, next question. If you are approved for a large sum of loan, can you purchase a commercial and a rental building?
SBA, you need to occupy 51% of the building. It all depends on the property that you're trying to purchase, but how is this property going to benefit your business? Right? Question that you got to ask yourself. That's one. But your business needs to occupy 51% of how many buildings you're going to buy. If you buy 15 buildings, your business is occupying 51% of every single building that you just purchased.
There's another question, but it's more general of
okay.
If you're struggling in your business, is there still a possibility that you can attain a loan to help your business?
100%. And that question, we get that question a lot, especially because of COVID and everything that has happened, right? Every business owner situation is completely different. And sometimes business owners, you guys just need that guidance, right? So SBA is not just the only way of getting a loan for your small business. There's many alternative ways to qualify for a business loan. One of the things that we get a lot is equipment. Client goes to their specific bank where they bank and they can't get the building because of cash flow. That's usually what the business owners want to see. But there's a lot of alternative ways to get lending for your business. So you can reach out to me and I'll be more than happy to explain to you the different options there are for your business if you're struggling.
Perfect. That's the end of the questions. You have one final question, and this has been asked by multiple people. So they're just asking how can we work with you? How do we get in touch?
There's my information there, Wilbur Cabrera at the bottom. There's Reyes Mejia, our CEO, phone number. There is our email. You're more than welcome to email us. There's our website as well at SoCal Loans. That's our Instagram page as well. You can also reach out to me on LinkedIn. Be more than happy to work with anyone that's on this call or anyone that you might know that might need help.
Hi, excuse me. Can you please announce your email, spell it out, and the phone number? I'm on audio, so I don't see anything. Thank you. I'm unmuting myself now.
No problem. So Wilbur Cabrera, phone number is 818-454-5483. Email address is w.cabrera, CABRERA @SoCal, SOCAL .loans, LOAN as in Nancy, S. w.cabrera @SoCal.loans. And my partners, Reyes Mejia, 323-273-1457. His email address is r.mejia, MEJIA, @SoCal.loans.
Perfection. Thank you so very much. God bless you. Enjoy your weekend.
Thank you. All right, guys. Thank you so much for everybody. I hope this call, this webinar was very informative for all of you from SoCal Loans and from the chambers. We really thank you all for being here, and thank you so much.